So, welcome everyone, and thank you very much, Adena, for spending time with us today.
Sure.
It's a hard act to follow.
That really was.
But you can do it. If anybody you can do it,
we can always rely on Stan to tell us what's on his mind.
Yeah, exactly. Let me start with the most basic thing. I actually, as I mentioned, you looked you up on Wikipedia today, and it said Nasdaq is a securities exchange, which I guess it is, but I think you have a larger vision. Tell me what you see Nasdaq as being today.
Sure. Well, Nasdaq is a securities exchange, but that is our foundation. But today we really are a technology company that serves the global capital markets. So we have our own exchanges, and it's a very technology-driven part of our business. But we also then have really deepened our relationships across corporates, investors, market participants, and other exchanges with technology. So we provide the technology to 130 other exchanges around the world. We serve about 5,000 asset managers and asset owners with insights and intelligence to help them make smart asset allocation decisions. We also provide corporates with a lot of tools that will enable them to be better public companies. And then we have our anti-financial crime suite that really supports the banks and brokers around the world. So today we've really taken that foundation and really extended and expanded our relationships with our clients through technology.
So goodness knows tech is the byword right now for just about every company. And a lot of those asset managers and corporates and financial institutions have a fair amount of technology themselves. So what do they do and what do you do? What do you add to what they already are doing or want to do?
Right. Well, I think that it's really important to recognize that workflows, the world has become a lot more complicated. And therefore, we have to find ways to enable them to do their jobs better, more efficiently, as well as to give them better access to insights and that's really a data play. So to allow them to have better data, better workflow tools to be efficient and smarter in making those decisions. So with regard to asset managers and asset owners, we provide a tool that connects the asset managers and asset owners together. So an asset owner would say, I'm really interested in this strategy. I want to understand who's out there who has funds that I can invest in that strategy. What's their performance? What's their management team? How have they done? How do I make sure that I'm able to allocate assets into that strategy? So that's called eVestment, Nasdaq eVestment. And then on top of that, we then provide those asset owners with portfolio management tools that allow them to manage their portfolios very dynamically. So that's just one example. I think, as you know, in the anti-fin crime suite, we have a complete end-to-end solution to manage fraud and AML detection, investigation, and reporting for banks. And then, of course, within the exchange business, we provide our core technology to exchanges all over the world.
Yeah, and I want to get to the financial crimes issue because it's a very big issue that you're very active in. But before that, how much of what you're providing, Nasdaq is providing, is, if I can put it this way, the pipeline, the connectivity, and how much of it is the add-on of the analytics?
Well, I think certainly within the exchange business itself, it's connectivity and then, of course, the interaction of those orders within our exchange business. Within our workflow tools and analytics tools, it's a lot of intelligence. So it's really what we do with certainly both with Nasdaq eVestment and with Verafin is they're both cloud-based tools. We pool data together across thousands of institutions, and we then are able to run very, very advanced algorithms and analytics on them, both for asset allocation decisions in one use case, and then for anti-financial crime management in the other use case. And so we are very tech forward. It's all very modern technology, and we are now running AI algorithms. I'm really focused on that in our anti-financial crime suite and starting to figure out how to leverage that over in our other businesses as well.
Because I think a lot of financial institutions have invested an awful lot in technology, particularly the big money center banks. How much of your business is with some of the smaller banks and financial institutions as opposed to the big guys who do it in-house?
Well, actually, more and more of the big banks are looking for outside technology partners, which obviously accrues to our benefit. But with Verafin, we started, and that's our anti-financial crime technology, we started with the smallest banks, actually. In a way, you have to think about it, every bank has a responsibility to manage out fraud, manage out money laundering, and be really great at it. And at the same time, they don't all have the same resources to do it. So with the smaller banks, Verafin really started there to say, we can provide you a single platform, end-to-end fraud and AML detection across all of your payments, whether it's wires, checks, ACH, all of those capabilities, as well as, and they look at every transaction. And the reason why they're more successful than others is that they then pooled the data. So instead of just looking at that one bank's transactions, they pull that data into a pool of 2,500 banks now, where they're able to look at patterns of behavior across all of the banks. I mean, criminals don't just bank in one bank. So they leave little data crumbs across the system, and Verafin is, we think, the best in the world in being able to root out those criminals through their algorithms. We now are going up to the largest banks. So the largest banks have used traditional on-prem technology solutions from outside firms, or they've built their own capabilities, but they're realizing that the problem is becoming more and more complex. And again, criminals don't just bank with them. So if they're able to leverage the data that we have and leverage the workflow tools we have, they'll be more effective. So we signed our first tier 1 bank last quarter, and we're running a lot of POCs where we can show the benefit of this, this technology across those tier 1s. And we're getting more squarely into the tier 2 banks now.
We can't have a discussion about technology without talking about artificial intelligence. And it's been around for a while, actually, but certainly since ChatGPT, really a great marketing move, by the way.
Yes, it is.
OpenAI. But we all talk about it. Tell me what you're doing right now in terms of the modernization of the markets with AI already, and where do you see it going?
Yeah, I mean, first of all, we have been leveraging AI within Nasdaq. Verafin has been using it for several years. And there it's really kind of advanced algorithms, self-learning algorithms, getting smarter and smarter and identifying patterns of behavior. And so we're able to learn from them as to how they've been able to integrate that into their product suite and into their product development suite to make it so it's more effective. At Nasdaq, we actually are asking the SEC to approve our first AI-driven order type within Nasdaq. And a big part of that is we have billions and billions of messages that flow through our systems every day. About anywhere from, I would say, 60 to 80 billion messages a day. So we have a big data pool. And what we're trying to do is structure order types that give institutional investors better fill rates. So we have a certain kind of order type called a midpoint extended life order, a little technical, but there's a timer on the order. It actually introduces latency to create a pool of liquidity that's kind of segmented within the market. And what we're trying to do is see what is the optimal timer on that order that maximizes the fill rate at the stock by stock level. And we evaluate about 175 different characteristics of the market to try to identify what is the right timer, each stock by stock, and it updates every 30 seconds. So it's a good kind of self-learning tool for the market to create a better experience for our investors. We'll see, that's just the first foray. But a big part of our strategy also is bringing our markets to the cloud. And that's a foundation, because the more you can put your capabilities into a more scalable, more resilient kind of infrastructure, and the more you can use their tooling, the smarter we can get with our technology.
Tell us about that SEC approval that you're seeking, because one of the issues is a lot of excitement about AI, some trepidation. But one of the issues is it right? Because we hear all these anecdotes about really wonderful things that are just flat wrong coming out of a generative AI. What does the SEC put you through to make sure what you're using gets it right? Because in financial transactions, you got to be right.
Yeah, I mean, I think first of all, with an order type what I just described, we're able to demonstrate how all the inputs generate an output, right? It's a self-learning mechanism, but it's a very defined package, of AI algorithms. So we are able to show explainability of the model. And I think that's going to be a core underpinning of early AI implementation in the markets. However, when it comes to anti-financial crime, I think that's where we have to unlock the potential of the AI to help manage crime. And my view is criminals, they don't follow rules and they don't follow laws, and they're going to use the best technology available. So if they are able to use tools that are even more advanced, that may not be totally explainable, but get them to an outcome that they're looking for to take advantage of the system, I think that the banks and brokers, they have to be able to leverage those same tools to combat those criminals. And so we are asking regulators to think more broadly about how to leverage the next generation of AI, which is not as easily explainable, to be able to find patterns of behavior and root out criminal behavior. So we're hopeful that they can kind of look at use case specific ways of identifying how the guardrails should be applied.
Let's talk about financial crime, something that's very much on your mind. You've written about it just recently, actually, an op-ed piece about it. One of the things I learned from that is how big it is and how little it's detected. Give us some statistics on that.
Yeah, well, there's about $4 trillion of money that's estimated to be laundered through the financial system globally, and only about 1% of that is really caught. And so that means that it is a massive problem for the world economy. It's also, and frankly, the banks are being put on the front lines to combat this problem. And yet, so they have to have the best tooling available to do that. I think what we're challenging the regulators to think about is, number one, as I said, criminals don't just bank in one bank. In the United States, we're allowed to pool data into a third-party kind of container to allow for banks to pool the data to look for criminal behavior across the system. But in Europe, that is not allowed. In Canada, that's just starting to be allowed. And so therefore, they're really hamstrung, and they can only look at their own transactions to try to find criminals. I think that's number one. Number two, putting more AI algorithms and kind of unleashing the power of the next-gen technology to find those patterns of behavior so you can root out the criminals is number two. And then number three is a feedback loop. Regulators receive probably millions of what they call SARS reports, which are suspicion of criminal activity by the banks, but they don't ever tell the bank, yes, this was in fact a criminal act or not. If we had that feedback loop back from the regulators, we could then make the algorithms even smarter. We could say, oh, we've got validation that this was a real criminal act, so let's make sure that we can use that to kind of be smarter with the next SARS report.
So that gives me a good sense of where we are today. Where are we going? Start with Europe, first of all. Is there a real movement toward allowing some consortium data sharing to get past that problem you described?
Yeah, and that's the way to say it. It's consortium data sharing. And the answer is that there are some rules being proposed to allow for banks to start to share data within the EU and within the UK. So I think that that's a really important development. And of course, there are privacy concerns, but the fact is that there are new technologies where you can take that data in and encrypt it in a way that makes it so that you're only using the data that you need to find the right, that specific type of behavior. You're not having to expose PII from bank to bank in any way. You're basically maintaining the integrity of the privacy while still being able to leverage the right amount of data in an encrypted fashion to root out the criminals.
So if that's Europe, come back to the United States. As you said, there is some permission to have some sharing among banks here in the United States about this data. At the same time, there are issues about AI and approval of AI actually to sort out the financial crimes, as I understand it. What are the problems there?
Yeah, I think that the fact is that the banks end up putting in, as I said, so many different suspected reports of activity without that feedback loop back to say, this is real, this is not. Because the more that we can tune the engine, the better we can tune it, the more effective we're going to be. And a big part of it is reducing false positives, right? The banks have to have an army of people to look at every single pattern that is suspected, and then they have all these false positives they have to walk through. The great thing about Verafin is that we're able to reduce false positives by 25 to 50% within the banks because of the use of the consortium data and the AI algorithms. But now, even still, if we had even more of a feedback loop, we can make them even more efficient. It is unfortunately, it's still a very inefficient process.
You describe what the SEC is putting you through to get approval of AI in a very different part of the forest.
Right.
How does that apply to financial crimes? Are you going to have to go through a similar process, and does it work as well? It's not quite as specific about inputs and outputs.
Yeah, so I would say that with regard to anti-financial, it's a different regulator. So it's kind of the OCC, the Fed, and others. And they actually require the banks to have complete explainability of their models. So,
Does that work?
That's an expectation that they have. We have to prove to the banks, they do diligence on us. We have to prove to them that we can prove explainability in order for them to feel comfortable using our system. And that's why I think we want to engage with the regulators to say, what's the next generation of AI you're going to do that's going to make it even more effective, and therefore maybe it's not totally explainable, but you understand that we're using it for the right purpose. And so changing the regulatory, I would say, process around the use of AI is going to be an important next step for every industry, and certainly for the financial industry. We are a data-driven industry. We are probably one of the most data-driven industries in the world. We're also kind of on the front lines of technology in many, many regards. So if they can work with us to kind of figure out how to use the technology the right way, I think it could become a blueprint for other industries.
As you seek ways to help financial institutions, other customers get their work done, part of that work right now has to do with ESG. What role can you play with respect to data, again, talking about data, when it comes to environmental, social, and governance?
Yeah, so we actually provide corporates with tools that help them manage those programs a lot more efficiently. So, corporates are having to deal with different rating agencies, taxonomies, investor expectations. There's no uniform, approach to it. There's even no uniform taxonomy around it, and that's very confusing for corporates. And it's frankly very labor intensive and expensive for corporates. So What we look at as our role as an exchange operator is to really help corporates navigate the public markets more effectively and efficiently. So we've actually built, we bought 2 small companies that have built these tools to help with ESG generalized reporting, put it in one container, and then we map it to all the taxonomies and all the rating agencies that are out there. And also one that's very focused on environmental. So we have one that's more general, one that's focused on environmental, and all of the sustainability metrics that companies need to put forth. We think that that makes it so that they can be more efficient and effective. And then we actually have an advisory team that helps them figure out how to communicate the right way with investors to make it so investors can give them the credit that they're owed for the programs they have. So we're not trying to take a stand on it. We're just trying to make it so that corporates can navigate it more effectively. And actually, it is the fastest growing tool within our corporate division within Nasdaq. Serving corporates because they have such a need for it.
One last one. We've talked about how Nasdaq is more than simply a stock exchange. But you still are an exchange.
We are, yes.
And you are an exchange for regulated securities. There's some news recently about regulated securities exchanges involving Coinbase. Coinbase, ironically, is actually listed on Nasdaq.
Yes, they are.
So it's one of your stocks. When something like this comes up, when there's an allegation that, in fact, they are illegally trading in regulated securities, what do you do? What does Nasdaq do with a listed company like that, where you have the SEC going after them?
Yeah, well, first of all, the way that you have to think about the process to go public, I think is probably a good starting point, which is when a company chooses to go public, they submit an enormous amount of information to the SEC. They think about their business model, their financials, and their risk factors, and all the risks and disclosures that investors need. The SEC then goes back and forth a series of questions, and once they approve it, then the exchanges are allowed to evaluate it. And the way that we evaluate it is on the basis of very discrete listing standards as well as governance standards. And we do a governance overlay. Do they have proper independence? Do they have, is the board composition appropriate for the risks that they're taking? Do they have an independent audit committee? Things like that. And then they come on. So in this particular case where you have some changes in the risk factors, I think that the question is, are they disclosing those risk factors? And that's really a job for the SEC to evaluate.
At the same time, do you have to independently take a look at it now, given the fact you're on notice?
We would actually work with FINRA and the SEC. So it's a very collaborative relationship across FINRA and the SEC in that context.
Okay, Adena, thank you so much. Really great to have you. That's Adena Friedman. She's the chair and CEO of Nasdaq.
Thank you.